Wheat has 9 lives, but water will take all 9 of them in one shot.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I'm joined today by Eric Relph of Comstock Investments. We're going to look back at the week that was in the ag commodity markets. What an eventful week we have had. Well, since April 2nd, it's been a roller coaster ride here, Eric. The tariff announcements came out and lots of back and forth. All kinds of stuff to talk about. And as we went into Friday, of course, now we're actually recording this before the close on Friday, but as we're recording this, the grains are looking pretty strong. The livestock trade is coming back. Outside markets are kind of all over the place, but that's kind of normal here lately. So I wanted to get your take on how you think the markets performed overall in the face of all this tariff chaos.
Overall, I would say really well. Obviously, the 2 day washout in the equities that hit everything pretty hard sent us on a limit down move in the cattle, and there were things that happened along the way that were certainly negative. But all in all, I think the market has sustained it pretty well. Particularly in the case of the grains, it's been extraordinarily strong. Now we've got the dollar trading below par for the first time in 3 years, I think. This is just some pretty robust stuff, and the worst part about it is it's difficult to keep up with, right? I made note that at 12:19 on I can't remember what day it was, Wednesday maybe, we had a 1 minute 1,000 point rally when the 90-day pause was announced in the Dow Jones, and to rally the Dow 1,000 points in 1 minute, it's just that's impossible to even react to. So it's been really trying. I think the liquor stores are making a lot of money from a lot of folks, and I know that we are looking forward to the weekend.
A lot of people are worn out, kind of mentally exhausted after this last 10 days here, that's for sure. All right, so as we look at things, I'm a little bit surprised to see soybeans coming back. You would think if anything was going to be affected by all this tariff talk, it would be soybeans. You would think they would be reeling right now. And that's not
Especially,
the case. How come?
well, especially when China is the primary headline, right? And so I think it's a few things. I can't fully explain how we've been able to move like we have in the soybeans, but I think there's several factors that weigh in there. And one of those is the fact that we are crushing more domestically. And there is this lingering hope for the domestic biofuel program. And Brooke Rollins continues to talk about that every time she has a public engagement. She continues to tout the administration's focus on the farmer and getting something put together for biofuels, and having the Biofuel Council meet with Big Oil, and they're meeting with the EPA. And so this all lingers in the background. Meanwhile, soybean oil holds near multi-month highs. And while not overly impressive trade, it's still positive. And you can see we rallied off of that mid-March low significantly. We have backed off just a bit, but this is some really strong trade sitting at multi-month highs, and I think that's the trigger. And I think that's a lot of what's pulling the beans along as well. Outside of that, exports have been strong. We saw USDA revise the export number for both corn and soybeans higher. We've been waiting on that. We saw that yesterday. We saw the reduction in ending stocks as a result. And so there are things that you can point to and say, yeah, that could be factoring in, that could be factoring in. And ultimately, in the case of the beans, I think probably the biggest one is lost acres. Right now, it still looks like corn's the thing.
Well, plus, we're still harvesting in South America. I don't think they're quite done yet. So there's still quite a bit that's coming into the pipeline yet. I don't know how much more China can absorb from them before we're about the only game in town again.
Right. And the other thing about that is, I'm glad you brought that specific topic up, because I think, and I could be a little off base, but I talk to people both within our company and outside of our company that are in this industry. And I think the general consensus is we're going to see cancellations for soybean purchases from China. It's just a matter of when and to what degree. But I think everyone is anticipating that. And even with that anticipation, you're continuing to see this market hold up really well. And so is it priced in? Of course, that's going to depend on how much canceling they do. But there's got to be, to some degree, that's already got to be factored in. And so if we see some smaller cancellations, I don't think that's going to really hit the market all that hard. Obviously remains to be seen, but that's something else that's kind of lingering in the background as a potential black swan for this soybean rally.
But considering how much the value of the dollar has dropped, could they cancel it and just turn around and rebuy it now at a cheaper exchange rate?
I'm not going to pretend to know the logistics of how that works. What I have understood, and I may be off base, we probably ought to bring Justin in. He worked the export desk at the Gulf for a while. But what I have understood for my career is if they cancel here, they have to shift that purchase to another country at that time. And so I don't think it's a deal where they can just shut it off and then turn it back on in the same place.
Interesting stuff. All right. So by the time we talk next week, things are going to be probably well underway with planting season this year, wherever it's dry enough to go.
Mm-hmm.
What do you think about that this year? Are we off to a pretty good start, do you think?
We haven't done anything here in Northwest Iowa. The soil's still too cold. And most are talking like maybe late next week they'd be able to roll. That's kind of the pace that we're on up in this part of the world. Minnesota's obviously going to be a little colder. They'll probably be 2 more weeks. Southern Iowa, they could start yesterday. I've not heard of a lot, but there are planters rolling down there. I'm driving down to the Kansas-Oklahoma border today. Should be there before dark. So I'll be interested to see what's going on in eastern Nebraska and eastern Kansas on my way down there. See what kind of percentages are already being worked, but I would imagine it's going to be pretty high in those areas because they've been dry enough to go, and obviously been a lot warmer than what we see up here. So, I think we're going to see on pace kind of planting here. Maybe not next week when we get that Monday crop progress report, but maybe the following week we might be catching up a little bit. Easter's probably going to be a busy weekend for a lot.
While you're down there, would you do all of us a favor and walk out in a wheat field or two and see what they look like? I had heard from Southwest Kansas that some of that wheat really got singed the other night, got down to 21 degrees, and here it's in the joint stage. I just wondered what it was going to be looking like by the time you get down there.
Yeah.
Also, they're talking pretty good chance of snow, several inches of snow in like North Dakota and Minnesota and Wisconsin by next week too.
Yeah, I mean, kind of coming across from central North Dakota, moving east all the way to Wisconsin, there's supposed to be a band of snow. And we need spring, I think, for everyone's mental sake as well. But this is sure drug on plenty long for most of us. Like I said, it's too cold to plant, too cold to really even be wearing short sleeves all day long up here. So we are definitely ready for the break. But with regards to the wheat regions down there, it's kind of been a tale of 2 classes here. The HRW progressing really well. They've been fairly dry. SRW country, very wet to the point of being its own set of problems and maybe worse than what we're seeing in HRW country. And we've actually been narrowing the spread between the KC and the Chicago along the way as a result. I don't know how long that can continue. And I was actually curious to see what your take was on what this rainfall has done to what regions. How big a swath is this? Because I know there was multiple double-digit systems, 10-inch plus systems that came across, Mid-South all the way up through the Ohio River Valley.
Yeah, lots of flooding around the Ohio River, especially you get up in that area. Gosh, I saw a video just yesterday again of one of the highways in Kentucky. It wasn't even, I don't believe, on the Ohio River, but it looked like you were driving out in an ocean. Just the water right up against the edge of the highway and water on both sides and white water, white caps blowing up on the road.
Yeah.
It was kind of creepy. It looked like driving on the Outer Banks in a windstorm.
Wow. Well, wheat has 9 lives, but water will take all 9 of them in one shot. And so any of that SRW that was well emerged and coming out of dormancy that got underwater, it's going to be toast. I mean, just done. And so there's a story playing out there.
Well, I will be talking with the president of the American Soybean Association today as well, and he happens to hail from Kentucky. So I'll be asking him about his plans for planting the new crop and what he's going to plant first, corn or soybeans or what, and how far off they are. So that should be interesting. That will be airing on Monday, I believe. Looking at the livestock trade on Friday. Look at them go. And here they've been kind of following what's going on in the equity markets, haven't they, until now?
Yeah, just like a lost puppy dog for the most part. I mean, it's been unbelievable, particularly in the case of the cattle. I mean, you could just you didn't even have to see an opening call. You could tell what the cattle were going to do on the open if you just looked at what the equity futures were doing, and lo and behold, that is what would happen. Uh, Now today, it's been a little bit of a different deal, just because the equities have been fairly quiet, so the cattle have detached somewhat. Even with lower box beef yesterday, even with lower Fed cattle cash trade this week, we're still seeing a nice finish to the week, especially in the feeder cattle and the deferred live cattle. August feeders up 285 at 282.77, holding very near the high of the day as we are right now about an hour from the close. And you can see, I mean, that's the top end of the week's range. Here's Monday's bar right here. We opened sharply lower, finished in about the middle of the day, in the middle of the day's range. But you can see the tops every day this week has been fairly similar, and we're right up there to finish the week, which would be a good sign if we could do that in the case of the feeder cattle. June live cattle up $1 at 196.20. A little different look to the chart here, but you can see we're still mid-range for the week, so not all bad, even though it maybe felt like it throughout the week. If the fundamentals can come around a little better, I think we've got a storyline. But with boxes sliding lower and cattle feeders taking some lower fed cattle cash, I think it's going to be a little bit of a tough row to hoe here for a week or two.
On that chart you're showing there right now,
Yep,
that purple line, what is that?
that is the 100-day moving average.
100 day. Okay.
Yes, we probed it on Wednesday, I believe. Yeah, probed it on Wednesday, and that was a key reversal day in a lot of cattle contracts. A true key reversal, opening at a below the prior day's low and finishing above the prior day's high. Huge technical marker, and then we just didn't see any follow through yesterday. But there again, equities were lower yesterday, and the cattle were following along.
So it looks like that's a pretty stout support line then. If it takes that out, then anything goes, wouldn't it be?
Pretty much, yeah. I mean, and that coincides almost perfectly with trend line right now. And I can't broaden this out to the point where I can kind of show that a little better, but that basically is your trend line right here, and that hits almost perfect. And you can see with a little more volatility, our lower Bollinger Band is going to be lining up right at that mark as well. So yeah, there's multiple things that are kind of hitting at the same time. If we get down to that level, you can see it held once and gave us propulsion higher. If we trade down to that level, we probably will see a boost up. But I would also bring note to the fact that there are chart gaps on all of these cattle contracts, feeder and fed cattle, with maybe the exception of the front months. But in the case of the June live cattle, that wouldn't fill until 203.70. So still like $7.50 above us here. In the case of the August feeders, that gap would fill at 288.12. So about $5.50 higher than where we're at right now, even after a nearly $3 up day today. So there's definitely technical reasons that we could push up here. We just need the fundamentals to match, and maybe we'll see that.
After the tariff announcement, everybody thought, well, maybe the fat lady had sung, as the old saying goes. But here it's been hanging around there. How is the futures market comparing to the cash right now?
So right now, in the case of the cattle, we're running about a $2.50 deficit to Southern cash trade. In the case of Northern trade, we're running about $6 behind what we're seeing late yesterday. So we are at a deficit on the national average of about $4 to $5 in the April live cattle, and here we are coming up on the middle of April. In the feeder cattle, we're very close. They'll cash settle at the end of the month, and they're running about $1 behind the index level in the April feeder cattle right now. So there's still some reconciliation to be done in the fed cattle arena. And then keeping note that June is running a $5 deficit or $4.50 deficit to the April, and April is going to be gone sooner than later. Options are already off the board for April. That money is going to flow into June, and June's got some catching up to do.
All right. What about on hogs? Where do we now stand on them compared to the cattle?
Hogs are actually mounting a better recovery the last 3 days. I'll pull up the June contract here. We did have a reversal on Wednesday in the hogs as well. And since that, we've seen nothing but follow through to the top side. So yesterday we saw significant follow through in the case of the hogs that we didn't see in the cattle complex, and now seeing a little bit more positive trade today. And now we do have a gap in the hogs, just like the cattle in this June contract that would fill at 94.97, and we're about $1.30 away from that mark right now. So can we push up through that gap level that coincides with some moving average resistance? Quite possibly, especially when you look at pork as a recessionary meat, that might be a good alternative to some higher priced beef. If the beef continues to drop, then I think the hogs and pork are going to have a little bit of a struggle on their hands.
Yeah, it looks like the hog chart is about as far below the 100-day moving average as what the cattle were above it.
Yeah, yeah. Well, what the cattle were above it, not now, but yeah, they're a mile apart right now. I think you've got to get like a $9 rally in the June to be above the 100-day right now.
So as we get ready for next week, I guess anything can go, but what are you bracing for next week? What are you going to be focusing on?
Although I'm going on this trip to go to a family event, to a wedding, but I'm going to have to take some breaks throughout the weekend and kind of check in on the headlines. That's going to be the biggest deal. What are the headlines looking like coming into the 5 o'clock open Sunday night of the equities? And that's going to steer most everything. The grains have pretty much been impervious to what's going on in the equities. So I can't really say that's going to impact the grain trade all that much, but the overall market sentiment is going to be dictated by what those equity futures look like at 5 o'clock on Sunday.
So even though we've endured some huge swings in the ag commodity market space here this past week and a half, really nothing has changed in the way you're looking at your market strategy for new crop?
Not yet. No, I mean the fact that the grain markets haven't been tagging along keeps me hopeful that we're going to have some opportunities. We still have to get into U.S. weather, and if the likes of Eric Snodgrass and a couple of others are going to be anywhere near accurate, there's going to be some problems, and there's always opportunities throughout the year to trade weather and market into a weather scare. I would suspect that if that's going to happen, we're going to see it in the next 60 days. Still stay hopeful for that.
All right, Eric. Well, travel safe and let us know what you find out when you get back next week. Can't wait to hear the report. That's Eric Relph with us. He's with Comstock Investments. And that'll do it for this episode. Again, thank you so much for joining us. For producer Brianne Jenkins, I'm Marlin Bohling, and we'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.